Hey there, my name is Chad and I'm an enrolled agent. An enrolled agent is a tax professional who is credentialed by the IRS and who has unlimited representation rights before the IRS for taxpayers. So today I'm going to be talking a little bit about tax basics for the self-employed individual. Let's go ahead and dive right in. So self-employment taxes are 15.3% and they come from two different sources. So you have Social Security and Medicare. And effectively, even though it's 15.3%, we only pay taxes on 92.35% of our net income. So like I said, effectively, that brings us down to 14.13% is what we pay. And for those of you who are unfamiliar with the term of net income, your net is your gross income minus any expenses you have. So let's say we got a $1,000 paycheck from our online ESL company, and we also paid $100 for props that month. So our net income is $900, and we would owe 14.13% of that in self-employment taxes. So next we have income tax. So income tax is actually a sliding bracket, and we also apply our standard or itemized deduction first before we figure out income tax. So as I'll discuss on the next slide, the standard deduction is $12,200 for individuals, or $24,400 if you are married filing jointly. So let's say we earned $5,000 above our standard deduction. So that $5,000 is going to be subject to a 10% tax rate. Now, what happens if we're actually $15,000 above that standard deduction? So if we look at the chart, $15,000 falls into our 12% tax range. So this doesn't mean all $15,000 is going to be taxed at 12%. The first $10,000 basically is going to be taxed at 10%. Then the next $5,000 of our income is going to be taxed at 12%. And if you're married filing jointly, all these numbers double your standard deduction and your taxable income brackets. So let's talk a little more about standard and itemized deductions. So the standard deduction or itemized deduction only applies to income tax. So if you earn less than the standard deduction of $12,200 if you're single, you don't have to pay any income tax, but you still are subject to self-employment taxes unless you have other credits that help pay that for you. So like I said, it only applies to income tax. It's a flat rate deduction, $12,200 for single or $24,400 for married filing jointly. Now, there is also an alternative to the standard deduction, and that's the itemized deduction. And again, this only applies to income tax. And these are the big four items that I usually look for when I help people with their taxes. If they have a lot of mortgage interest, property, state, and local income taxes, charitable contributions, or medical expenses, they might be a good candidate for an itemized deduction. So that would allow you to deduct more than your $12,200 or $24,400. So self-employment deductions are an area that cause a little bit of confusion. So the standard deduction and business deductions oftentimes get lumped together when in fact they're two separate things. You're entitled to take business deductions and then apply the standard deduction once you've figured out your business income. So for those of you who aren't aware, being an independent contractor means that you are also a sole proprietor. So you have a business in that sense. You would be filling out a Schedule C profit or loss from business when you file your individual taxes. Now, some common deductions for self-employed individuals is the home office deduction, which has a simplified or actual method. The actual method is a percentage of your mortgage, utilities, things like that. And the simplified method is $5 a square foot. So if you have a 100 square foot office, you would get a flat fee deduction for $500. If you had a 300 square foot office, you'd have a flat fee deduction of $1,500. And the 300 square feet is important because that's where this simplified deduction actually maxes out. Even if you had a 500 square foot office, you could only deduct up to 300 square feet. Now, some other deductions are supplies. So, for example, like a whiteboard, if you use it in online ESL teaching, or maybe a giant map background. And some other things are internet and phone. There's a bit of controversy on this about how much can I do. I find the best way to figure out is come up with a business use percent for each one. So if you spend 10 hours a week using the internet for your work, and it's available 90 hours a week for personal time, that gives us a grand total of 100 hours a week that you're using internet. 10 of those hours are for business, so that would give you a 10% deduction you could apply towards your internet bill. And the same thing kind of goes with phone. If you're teaching in the mornings and you're using your phone to check up on classes, you could probably also deduct 10% of your phone bill. Just your portion of the phone bill and just that portion that's used for business. And one of the final things I'll touch on is quarterly estimated taxes. This question comes up a lot. It's not very well understood. There's a lot of misinformation. It all depends on your prior year tax situation. So do I need to pay quarterly taxes? This is actually a trick question. If you're self-employed, yes, you should be paying quarterly taxes. The real question most people are concerned with is, will I have an underpayment penalty? So you could go year after year and not pay quarterly as long as you didn't owe the year prior. So I've put together this flowchart. I'll link to it, to some articles with this and some other supporting articles in the video description. But let's run through this real quick. Did you owe taxes last year? Well, no. Okay, you're not going to have an underpayment penalty. So that's good. Did you owe taxes last year? Yes. Well, let's say we owed $500. So did we owe more than $1,000? Not in this situation. So we should pay at least 100% of last year's taxes or 90% of this year's taxes, whichever is smaller. And you can pay those online, IRS direct pay, make a payment, 1040 ES. Very simple. You could split this up into 4 equal payments. You could pay it all at once. It should be paid by the end of the year, though. So if we owed more than $1,000 in taxes, we need to be paying quarterly. All right, and that's it for my tax basics presentation. If you have any questions or requests, you can leave a question in the comments. You can send me an email. And you can also check out our blog for other great free resources. All right. I hope you have a great day. Tax you later. Bye.